All right. Good morning, afternoon, evening. Close enough to 8 o'clock. I'm a couple minutes early, but I see all this activity and I'm watering at the mouth. I can't go without. And so uh, all our trades from yesterday closed. All right. If we go take a look, where is this? There it is. So yesterday's worked well. I traded a little bit more in the afternoon, and then that was it. And then same thing again today. This morning I traded a few minutes with another student just before this live session. Uh, this big move here, in the middle of an illiquid market, just before the U.S. comes online. It's not atypical, it's the size of the move is, but the timing's not, right? So we have to be ready for ready for anything, so to speak. This is a normal measured environment, and it was a normal measured move, right? So starting from the beginning, a few more people have coming in. So let's go take a look at the calendar real quick, just to make sure we're not stepping in front of oncoming traffic. So on the calendar, top of the hour, pending sales, some gas news, oil news. And then that's it. Tomorrow is another day, and tomorrow we don't have anything. Okay, so this is our sandbox, and we're now well aware of what we're faced with. In this case, oil stuff, which should not impact the euro. Right. So from this perspective, then we can take a look at the day. And on the daily chart, let's remove this. Let's remove this. All right, so on the daily chart, we can clearly see today, which is 16 hours old, compared to yesterday, which is closed. Right, we did make a higher high. We have a higher low. And then if we go and look into those 16 hours and see how we created this, right, we'll notice that the high came in first. Right, so the high came in 1, 2, 3, 4, 5, 6, 7 hours ago. So literally at the beginning of the European session. Right, so that you highlight it. That becomes your ceiling. And then you also highlight the floor. And so that highlights your range. And so in here, you understand where you're wrong or you're right, depending on what your bias is. And so we saw a higher high and a higher low, and we also saw a green candle. We saw it at the top on the daily chart, right? So we're assuming that the highest of the high, might be the highest of the highest, right? And so if we're unable to push through this resistance here, maybe this is as high as it's going, right? So that's now where we're looking at. We're looking in this lower half, right? So let's go take a look at that on a 5-minute scale. Right, so now on this 5-minute scale, you start to draw the ladder that you want to use in order to predetermine where the turns might be, right? So you're just kind of guessing ahead of time where the turns might come in, right? One there, one over here. And you're just, you don't need accuracy here. You just need your line of sight, your mind's eye, to see where a possible support or a possible resistance might be. Basically, you're looking left to realize what's happened in the past might happen again. right? So highlight all these lines as you see fit, right? And now you would expect the price to go up and down this so-called ladder, right? This environment that you just highlighted. And so in this space, you've now figured out where you want to take action, right? These are static. The lines won't move. The price will be moving to and from the lines, right? So you've created this sandbox with these expectations, and now based off these lines, you have a job to do. And so you take that information here, oh, I'm at resistance, and you go to this chart and you can see, oh yeah, I am at resistance. I'm in box number 4, or in this case, A box, and I'm willing to spend money here, right? So I'm looking for that resistance. And if I see it, if we get there, I'll take that trade. And in my case, I want to sell, right? So I'm a seller because of the way we built the daily chart, right? The daily candle. Let's go back to that daily candle, right? We put the high in first 7 hours ago, right? We put the low in just a few minutes ago. And I'm thinking we're going to go and test that low some more, right? So why do I think that? Because on the 1 hour chart, right, the low came in first. Sorry, the high came in first. Then we did the low, and now we're testing to see if we can retake higher highs. If we're unable to retake higher highs, we're maybe heading for lower lows instead, right? So that's where the probability lies. And in this ladder, you can see yourself going down the ladder or going up the ladder, right? So in our case, I want to see it go down the ladder. And so I'm selling the rungs that are above me, right? So I started back here hours ago, about an hour ago with my other student. And so right here, I'm just going to start again. And I'm just waiting to see if I can get that resistance, and then I'll peel in some trades. And the idea is to layer in, right? So we have 4 or 5 clicks per box. You know, you give yourself a little bit of room there, and then spend that money as you see fit, right? So we're spending the money because we're at resistance, right? And the bias is second priority, right? The location is important. The bias is, if you think of it like tide, you know, it's either lifting your boat and you don't want to really fight it. So that's kind of what we're looking for here. Right, so we assume this move, this down leg is over. Right? We assume this is resistance. We assume resistance is holding, and we're going to maybe test slightly higher. And then the real deal will be, if we're correct, we go down. If we are wrong, this thing keeps going up, right? So what gives me the idea that we're going lower? Well, this pull up is already 36 pips, right? So from the low to where we are now, it's moved up 36 pips, right? It's already fulfilled the 4 boxes, right? And so going back to that, actually, no, let's just leave it there for now. Go down to a 5-minute chart. So in here, the price action is really what we're trading off of, right? We're trading off that resistance, and we're hoping to rebuild something like this and to head it something lower, right? An average daily range, if we go and take a look at that, you know, aspect, what's today's range? Today we did 65. The average is 76. And now we're wondering, are we going to add the missing 11 pips to the bottom of this? Or are we going to add the 11 pips to the top? Right? We have to make this candle 11 pips bigger to make it an average candle. And so we're trying to determine which way the average will come in. Right? And I'm putting my money on the downside. Okay, so that's kind of how we see this, right? We have to assume today is not finished and we're trying to finish it. And we're looking into the future, trying to see the trend, but we're not trading the trend, right? For you and I, trend is second priority. And so we see the structure, but we're looking inside of that structure. And inside of that structure, it tells you the bias is different, right? It tells you the bias is different. And so now we have to trade the facts. And this is when you go down to your 5-minute chart and the facts tell you you're at resistance or you're breaking that resistance and you're testing further resistance, so on and so forth. Right? So the assessment is live. It's an ongoing thing. It's not a, ask yourself one question and move on. Right? You ask questions all day long or throughout your 2 hours. Right here, I want to sell. All right, so I put 2 in there. It's a matter of time, right? And the idea is if we build and lay that risk out over time, so you're spreading it like you would, butter on toast or Vegemite on toast. It's an averaging game, and now you're building an average going in, and you're expecting to yield an average on the way out, right? Whereas a swing trader is really expecting one trade to deliver one outcome. Okay, so here we are recycling some of these trades, and I will happily reopen them if I can. Right, so this is kind of the stuff we want to do. Just slowly but surely recycle your trades. Get used to small, achievable, repeatable goals. Right? Small and achievable is really, really important. Repeatable is what makes you money. If it's just a one-off thing, you got lucky, you can't make money with that. Small crowd today. It's all good. So I posted a video again yesterday on YouTube from November the 8th. In that particular session, we started making 2 pips, 2 pips, 2 pips. We built a position into the 4th box. It pushed into a 5th box. We ended up taking 1 loss. And then about an hour or so later, those trades closed into the money. And so it's on the recording there. You can see it. It's about a 2-hour-long recording. I'll be updating those recordings and uploading them over time. I have about a month of backlog. So. Into the new year, I'm hoping to do these sessions on a live format. So right around here, right? Sell and don't go crazy, just sell 1 or 2. So now I've put the money that belongs in this box. I'm waiting to recycle some of it. And I have increased my size since yesterday, because yesterday I was still running with the original sizing from the original account size. And so we've earned the right to grow. And so the size, as you know, is the reward. Right? This could continue to go up. Anything can happen. And that's the thesis, right? Anything can happen, and you're just creating plan B instead of putting all your hopes on one trade. You're now exploiting the space that it may need. So going back to this YouTube thing, Google and visit the channel, click subscribe, like, comment, all that good stuff. Awesome. There you go. That's the kind of stuff we want. There you go. Thank you. There. Come on. No, we've already made a 36 pip move. All right. If we measure top to bottom here, or bottom to top, it's 1 pip bigger than expected. Right. And so we would expect a pullback, but not necessarily to the moon. Right. We have to go through one wrong at a time. And according to the facts, we make the money that we see fit. Try that again. If I can get another green candle or so, or a big push up, I'll sell more, repeat my trades. There we go. If we're gonna break out of the box, so all I did here is copy the box, and I'm getting ready for a break down into this new box. Sorry, I have the hiccups apparently. Yeah. I'm sorry, I'm replying to a message. Yeah, it is the whole YouTube thing is the idea for me to give back. I'm sending the elevator back down. It's a moral lifestyle, right? For me, this is kind of a spiritual. It's spiritual. It's this whole idea of giving this stuff to you guys is it's inner peace for me, right? It's purpose, meaning. It's almost like meditation. It's really a spiritual adventure more than anything else. You can clearly see I'm not doing this for the money. So, yeah. Have yourself a blast, people. You can learn how to trade. Right, so this is a measuring cup. It just lets us measure, volatility. If we assume this was a high on this swing, why not put the box on that high and then measure volatility in this zone here, right? So figure out what the market is trying to do from this high, right? So we can literally just focus on in this box and make our money in this box, right? So when it's pushing green, I want to sell. And if I sell at resistance, my target is within reach. Right? The other boxes above and below here are just to allow measurements. Right? It's a security blanket. It allows my mind a point of focus, a point of reference. It gives me something to look at and know that if it gets to this level here, I have this job to do. And because it's the same box every day, it's the same job on all three sides. All right, so it's not a guessing game anymore. It used to be. No, without the box, I'm forever guessing what I need to do. Inside of this box, it's always the same job. And the outside of the box bring with that, or with them, the outside brings with them their own behavior. Right? So depending on where we go next, my behavior adjusts accordingly. And so it's not stressful, it's not panic driven, it's not anxiety driven, it's fact driven. And because I have plan A already in line, so that's my probabilities, I'm therefore dealing and acting and reacting to plan B, C, and D. And that's where, the backup for the backup for the backup, that's spreading my risk out. Right? That's how I open all these tiny trades. Right? I'm looking for something. And when I find that something, they all pay me. And so ultimately I have 4 boxes worth of something to look at, right? Or something to look for. I'm trying to locate, one particular move, but I'm using this much space to do it with. Right? So on our ladder, we're already assuming that we're going to be testing support in a couple of minutes. Right? So the ladder allows you to look forward to your next move. The box allows you to line up the move and do it with, somewhat more accuracy. You want to be a sniper in the box. This is just putting you in the ballpark. This is just giving you an idea of what and where you're going to be doing stuff. Right? So we start at the top. And specific purpose for that, the reason for that is that's one group, and they trade the daily close, right? So the fact that today, right now, is 16 hours old, they don't care, right? They're still positioning themselves based on yesterday's candle closed. And so we're following their coattails, right? So if yesterday's candle close prompts them to go short today, we're going to see that and we're going to trade that. All right, so we just closed a few more trades. Let's reopen a few more trades. One right there. If it pushes up into this zone there, I'll reopen them again or reopen more. Yeah, so this morning, when I walked up to the computer, 6:30 or so, 6 o'clock, just before 6:30, it was right around here. We mentioned in the chat room sell resistance, and then about 10-15 minutes later, it was the right move. So yeah, it's a good way to start the day, more than just Folgers in your cup. Right, so I want to sell this at resistance, right? So I'm looking to my left and I'm assuming this right here, these 2 candles and that wick right in the middle is holding up the price, right? So I'm just testing an assumption. If my assumption is wrong, then I get to spend a little bit more money where my next assumption is, right? And then I'll probably have another one somewhere up here. Right, so I'm pre-planning the trades that are allowed to be here. Right? So if it pushes back up, I want to recycle that trade, something like that. Right? So I'm selling the rejection. This is just a unit of measure, and I'm just sitting here, waiting to use it. Right? The frame of reference, the security blanket, the feeling that you get with that box is more important than than you might think. It drives a behavior, and that behavior is consistent, which without the box is really inconsistent. So, you know, the box helps tighten up all of the loose ends. This right there, that move into this area is a sell, right? This is a sell. Right? And then we just wait a couple of minutes. Sell more if it gets to here. Oh, right there. And you don't want to, put the whole barn on the line here. Remember the clicks per box and the 1% per box and so on and so forth, right? So we're following the plan, we're following the strategy that we have, and the money allocation, the risk management, all that stuff, right? These are all measured moves, and it's how they unfold, right? We have to take advantage of this environment. Sorry, I'm trying not to change the box. Right, so we have all the way up to this zone there, top of the box, to be sellers, right? And that fulfills a full box, or sorry, a full average move, right? So this is just a measuring cup, like I said before, and it allows me to measure the market as it's, evolving. Okay, so selling resistance is the name of the game. I have one click left that belongs in this box, and so I'll put it right there. And so you saw the white line moved up, this white line here, right? So the white line is the average of everything. And so the average of everything as we speak is 11 pips away, right? So I'm engineering this, right? I control where this white line is. If I take off a trade, if I close a losing trade, that white line will go up, right? If I close a loser that's cheap from the top there, that white line will drop, right? So it's not, the white line is maneuverable, right? And so my job is to engineer an exit where the market is forced to trip over my white line, right? So you can see how I'm selling the market in the hopes that it will find that resistance that I'm looking for and then come back and cross my white line and maybe keep on falling. Right? So that's the kind of stuff that I'm looking into the future, but not into tomorrow, just the next move. Right? So if this right now is the current move, I'm looking for the current move to come to an end. Right? So I'm looking for the current move to come to an end. I just don't know where. I thought it was here. I thought it was here. Now I think it's here. Right? I'll keep thinking it's near here until I find it. And then once I find it, all of my trades start to close. Right? So we're building a position. We're postponing gratification. Right? So we're doing it with an expense, right? This is not a free, give me money business. You have to spend money to make money. And so you have to do that spending logically with a process. And this is it right here. Resistance, 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 resistance. right? Take a trade there if you have one, right? And now we wait to see what the outcome of all of this stuff will be. Right, so we're looking for a market to go lower, and if it continues to go up, so be it. Right, so be it. There will be stop losses. There will be things to do along the way. Right, it's not a one size fits all. It's not a one solution to all the problems. Right, this is a solution to about 70-80% of the problems. There's still that 30-20% you still have to deal with, and the deals don't always work out, right? So you try to deal your way out to break even, and if it's a loss, it's a loss, right? So learning to lose is the name of the game, right? So right there, top of the box, I'll take a sell trade, right? All I'm doing is engineering where that where that white line is, and right around here, right around this area here is where we would expect the market to come back to. Right, so if it's moved up 4 boxes, a pullback of 1 to 2 boxes would be in line. Right, if it keeps on falling and keeps coming back further and further, maybe we are going down multiple boxes. Right, we just don't know the future, right? But we know that it's not going to the moon without going through all that resistance first. Right, so in order to keep going up, it has to go through all this stuff. Does that make sense? And so this is why we think resistance holds, and we test for that. And this is hence we sell tops, or sorry, we sell resistance. So happens to be the top of a green candle. All right, so let's see what happens from here. We've built the position in the last 30 minutes. Oh, sorry, I'm stretching. In the next 30 minutes to hour or so, we want to see the majority of these trades closed. Right? So the idea is to spread your risk, postpone gratification, get paid. Right? We're dealing with the facts in between. It's dusty and dry in here today. I have to check the furnace. All right, so we're on to something good here, right? If I can get another opportunity to recycle that trade that closed, I'll take it, right? I'll sell if it pushes up. If I can see that green wick again there, I'll take that trade. Boom, good enough, right? The market didn't really push up, but I saw green, so I was too early. Darn it. Right? This is what happens. A liquid market, nobody here to return the favor, right? So somebody decides to move $1 million, who's going to be on the other side? And so the market will go and find that liquidity. And so we've built a position, we've layered the risk, we're waiting to get paid. We haven't spent that many trades. There's only 9 clicks on there. Right, so it's not like we're trying to break the bank. We're just trying to not go broke. Yeah, it is a critical area here. Looking left, we have some important resistance. So we have to anticipate the worst. And so ideally, you don't want to put, all your money at work at once. And the idea of the box helps you, spread that out. If you commit, to the money management aspect of this, it slows down your growth, but it puts a lid on your losses, right? So there's a cost to pay to become efficient, and it's learning the game. And at some point, you're not losing so much because you're not making the same mistakes you used to make. And so now you start to earn that income, right? Your equity curve actually is logarithmic. It's not linear. People assume linearity, and it's just not like that. It's very, very slow in the beginning. You saw I was trading one micro lot for almost a month. Now I earned the right to grow to two micro lots. Right? It's earning that right. We can't speed that up. That's how you end up, putting the cart in front of the horse. Doubling the account does not give you the right to double your risk. All right, so here we go. By doubling the risk, I mean going from 1% to 2%. You can't do that. Just stay at 1%. Just allow it to grow bigger. Right, so now I have 9 open clicks between what you see here and what I've done earlier, about an hour ago. All right, so I've built my position. I'm waiting to get paid. And you can see, those of you that have been following along, we have been getting paid. So time will tell, and in due time, the mean reversion nature of the market, you'll notice, is what we are exploiting. And we're using time to get back to the mean, right? So it's a price and a time cycle. If you have the time cycle in mind, you can pinpoint almost with accuracy your trades. That 2 hour per day is selected on purpose. Right? So here's where I'll take that 10th trade. I'm still, engineering that white line right here. Right, so I'm 1 box away from my white line, which is, not bad. It's manageable. Okay, so going back to our 5 minutes, real briefly, cat-like. We're testing resistance, approaching support. Going back to the hourly, for those that missed earlier, we had that great big move that highlighted the floor, and since then we've pushed away from the floor, and we know where the ceiling is. And so in this space here, that becomes our sandbox. And on the daily chart, we assume the sandbox will turn bearish because we did make a higher high 8-9 hours ago. And since then, the market's been falling, right? So we're just assuming we're going to resume the fall, right? So we're playing along. We're not trying to change things. We're not trying to disrupt things. We just want to ride coattails. All right, so baby steps. So that closed one trade. If I see a green candle, I'll reopen that one trade. Yeah, it's I remember when my kids were little, the coffee table got in the way, everything got in the way. And now 20 years later, I'm in the way. So it's yeah, same thing with your path through this maze. Baby steps. Learning to walk. Here for patience and discipline. A lot of that stuff used to be instilled in kids. A lot of that is missing nowadays, and we needed more of it. You can see it for yourself in trading. We'd be better off as a society if everybody was a better trader. Right? Yeah. Yeah, most of us, well, I know for me anyways, patience is something I had to work on. I work on it all the time. I jump the gun quite a bit still. And I don't do it on purpose. I do it and then I realize I did it. All right, so right around here, I do have that one click that belongs there, so I'll take it. Top of the box, good place for a trade. And we really don't know the future. Like the market could literally just keep going and going and going and going. And if that's the case, we have to deal with that. And that may mean losses, right? And so one or two losses is way better than losing everything, right? So this is why we stack our trades, right? And the losses or the stop losses therefore gets stacked, right? So this stuff is engineered this way to layer the risk and then layer out the trades, right? So it's this approach to the management that's important, right? We have to commit to the management. We have to commit to the numbers playing out. The probabilities are there. We just have to execute on them. 20 minutes or so, we'll have a good idea of what we're up against and then how to deal with it accordingly, right? I was trading here with Jordy, and we started here as a group. We should finish this as a group in the near future. Right? So remember, these are just measuring devices, right? They're just allowing us to measure volatility. This one is just positioned to wait. I'm just waiting to see where the price is coming, and I'll be using this to measure the next leg, right? So right now we're waiting to see the current leg, this move up. We're looking to see if this is the end of that current leg. And is it the beginning of this one? Right? We've already measured it should happen here, right? Price and time wise. Right? So we're in the right spot. Is it probabilities now playing through, right? And we have to see the probability come to fruition, right? So you can see how we repeat the trades, repeat, 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 repeat. It's a lot of what we're doing is recycling that same amount of risk over and over and over and over, right? So we're exploiting 1% of the account. We're not making 1%, right? So you're using money in order to make money, right? But it's not a one-to-one, where the swing trader is trying to risk one in order to earn twice as much, right? So if he's risking 1%, he's hoping to bring home 2%. We approach it very differently, right? We're using the same 1% and we're returning something every day, which is better than nothing. And so, yeah, all we want to do is be granted the opportunity to recycle that 1%. And if you could do it with a plan, and so the plan limits your exposure, you don't allow yourself, you've raised your personal standards. You don't allow yourself to lose more than so much. And that's a commitment you make to yourself. It's like quitting smoking, you know. So it's a choice, and it's not cold turkey, For some of us it is, but it shouldn't have to be. You can understand your own personal limits, and then you can commit to those. Right? Discipline, again. All right, so 10 more minutes. Let's see what happens. 10 more minutes for the UK fix, that is. 4 o'clock UK time, or GMT. All right, so I can recycle that one trade that closed. I'll put it right there. I'm trying to not go over 10 trades. And so I have 10 open trades. 4 of them are down here, or 3 of them are down here. And so 7 of them are up at the top there. Again and again, the waiting's the hardest part. We have a plan. We executed on the plan. We're now waiting to get paid for our work. And if something comes along and, takes a chunk of your work away, it imposes a dilemma for one. How do you make that money back? And then do you have the time and the psychology of all of that, right? It's a whipsaw every day. You have to control that emotional roller coaster. And I think the box helps with that. It determines for you what your job will be when the price gets there. And if you execute on that job, if you know what your job is and you execute, then it's a huge relief. Like knowing ahead of time that I know what to do here. When I don't know what to do, when I get pushed or pulled into a corner without a plan, I feel like a deer in the headlights and I react like one. I get run over. And so, yeah, it's a choice. I choose to plan ahead. Let's see what comes up next. We only have one trading day left for 2023. I had a pretty good year. I hope most of you did too. 2024 only looks up from here. I really can't wait. Only have one day left of waiting. Well, of trading. 3 days of waiting. 3 more sleeps. Notice how we're holding up in that upper box. Right, so I'm expecting something like this, right? Maybe we go sideways. Maybe we go up a little bit and then roll over, right? Anything can happen, but we're ready. That's the best part. Yeah. You don't go into the new year with open trades. No, that would make sense. I wouldn't want to do that either. And so, yeah, preferably all of our work will close according to the plan, right? And then we can be flat into the new year. Tomorrow's session will be very similar to today. Illiquid, more or less informal. There's a lack of calendar events, and so it's really flow driven. And by flow driven, I mean they're moving money because they have to, not because it's a good deal or it's a good price. No, they're doing it because the time says so. And some of these money managers and hedge funds and stuff, they get graded basically, on their monthly performance, especially at year end, right? You would imagine December is important. And so a lot of these guys will try to shine for the month of December, and they'll use right up to the last minute to clean their books or to put lipstick on their pigs. Right? So remember, you're swimming amongst the sharks. Just be ready. No, same as today. It's the same as the last day of the year is similar as right now. A lot of that positioning has already taken place, into December. And so today and tomorrow, it's just the last minute, deal making. There's really nothing on the calendar that we need to look out for. It's not fireworks. It's not the 10 o'clock fireworks at Disney or anything. It's just stuff like this, big moves with no catalyst. Right? Even the big moves are contained to measured environments, right? 5 boxes. And so we understand what's what. We understand why. We just don't know who, right? And what they're doing it for. So it's this idea that time is important and you're employing it in your analysis. Most people couldn't care less if it's the last day. They would treat it like it was any other day. And they'd probably get all pissed off and angry when they saw something like this. Right? So just knowing that this can happen is a big, it level sets the trader. Boxes might be a half a pip too big or something. Yeah, they're slightly too big. Remember, it's just an average, right? We're not looking for accuracy. We're just looking for the ballpark, right? This one's 9.1. These ones were 9.8, 9.7, right? You just want to be in the general area, right? It's a measuring device, like a measuring tool. And as long as, like a tape measure, as long as you understand what it is that is a constant to you, then, use that. So right here, we are assuming this is now a top, right? So we'll remove these, just move them aside. Take that one, put it on the top right there, and now get ready to measure this, right? And then by looking left, we will be using support and resistance that was there before. You could probably delete some. You could probably delete some of these. Yeah, 10. They're slightly too big. There's 9. There we go. That's better. Remember, the average is more important, right? You think of it as a bell curve. And there's a shoulder on either side, right? So plus or minus a couple of pips is not going to change much in the end. You do want to use consistency though. Like you want that if your box is wrong and you're using it well, use the wrong box well every day. If it helps with your behavior, don't stop doing it. That point was well made in that video with Nate Allred, the price and time cycle video that everyone has at least been referred to once. He makes that point eloquently. It is just an average, and it's a measuring device. It's not for accuracy, but rather for a psychological crutch. Right? So we're starting to roll over, close some trades. We're within the hour that we started from. And so if I was opening more trades right here, right now, I could pull my line up, right? So I'll do that on that green candle here, right? I'm selling on the green candle. I have one more to spend. So if it pushes up again, I have 40 seconds on that candle. So let's see. I have 30 seconds on that candle. Right there. All right, so I brought my clicks back up to 10. All right, so if you have clicks to spend, now would be a good place to put them. Missed it. Just waiting to see the trades close. If it closes, if not, we'll revisit the top of the box and we'll recycle some trades. Right, so moving forward, create your plan, for the next hour or so, and like prepare an exit. So plan to exit the market, right? Figure out where this is heading, figure out what you're going to do if it goes the wrong way, and then play it through, right? Live it through, or live through it. It's the planning is important, and then the ability to adapt, the ability to change and modify the plan or execute plan B if you have one. That's where the skill is. Fixing of the problems is what keeps you coming back. If you just suffer through problems and you don't fix any of them, you're going to run out of money by Friday, which is tomorrow. And so, yeah, don't get into problems if you can. And if you are in one, figure out a way out. Don't just hope and pray it fixes itself. That's the deal. That's what we do. Okay, so top of the hour, I do have to let you go, so I'm gonna stop the recording. Hold on to your trades. Don't touch your stop losses. Leave them where they are. Don't touch your targets. Leave that where that is, and just let the market play through. You've built your position. You postponed gratification. Now's the time to get gratified, right? Enjoy. I'll talk to you guys tomorrow, same time, same link, right?